Is Taiwan Semi a buy or a sell? Let's get started with the model. This is a large cap company, 986 billion market cap. They're trading at $190 a share and they have 5.2 billion shares outstanding. Taiwan Semi manufactures, packages, tests, and sells integrated circuits and other semiconductor devices. It is the largest semiconductor foundry in the world. It manufactures a bulk of NVIDIA's chips. Its products are used in high-performance computing, smartphones, Internet of Things, automotive, and digital consumer products. They were incorporated in 1987, headquartered in Hsinchu City, Taiwan. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They had $8 billion of free cash flow in 2021. It doubled to $16.2 billion in 2022, cut in half in 2023 to $9 billion. Then it blew up 150% into the trailing 12 months, their highest ever, $22 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that was highest in 2022 at $31 billion. Still pretty high in the trailing 12 months, $29 billion. Really good margins. They convert 38% of their revenue into net income. Their net profit margin is 38%. Revenue is a sales for the company, and that almost doubled from $49 billion up to $76 billion. They do pay a dividend of 1.5%, and it cost them $14 billion. The way you calculate that, you take their market cap times the dividend. 986 billion times 1.45% equals 14.3 billion. And their free cash flow is 22 billion, so they can cover their dividend 1.5 times with their free cash flow. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4. That's 960 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $826 billion. We divide that by 5.2 billion shares. And we get a calculated stock price of $159. They're trading at $190, so they're trading at a 19% premium. It's a sell according to the model. Even though it always seems overvalued, I think they will hit $2 trillion. If NVIDIA could hit $3 trillion, they should be $2 trillion, because NVIDIA cannot scale and grow unless this company's around. There are 64 companies in the same industry as TSM, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend the second most in CapEx. Intel spends the most, which is pretty amazing because Taiwan Semi is a pure play foundry. Intel is foundry and fabless. They do both. A good debt to equity ratio 0.2. For every dollar of equity, they have 20 cents of debt. That's equal to the median in the industry. They pay a dividend of 1.5%, which is better than the average, lower than the median. They generate a lot of free cash flow, second highest on this list, far behind NVIDIA. They're close to $1 trillion market cap, really far behind NVIDIA. And they are trading at a pretty significant premium. All their price multiples are worse than the median. They generate a ton of revenue, $76 billion, and they're still growing. Their 5-year annual revenue growth rate is 20%. Their 52-week high is 206, so the stock is not trading at its all-time high. Maybe 5% below that number. And their 52-week low is under 100. That would have been a great time to pick it up. If you were smart enough to put $10,000 into this company 10 years ago, you'd have $110,000 today. A 1,000% return, a 27% annual return. So to summarize, I have them trading at a 19% premium. I give them a ranking of 8 out of 10. They're a solid company. The nice thing about this company is they don't have to design anything. They just have to manufacture chips for other companies. Would I buy it short term? 8 out of 10. Definitely long term, 10 out of 10. If it come down a little bit, like to 170, I could pick it up, but it seems to never come down. Ratio is 4 out of 10. They do seem overvalued. Financials are amazing, 9 out of 10. 76 billion of revenue, 22 billion of free cash flow, all-time highs for this company. One big concern is tariffs. So this article talks about it. How the Trump tariffs on Taiwan chips could hurt the AI trade. A tariff is a tax on something. So if there's a tariff on Chinese tobacco that's imported into US, that means there's an additional tax if you import Chinese tobacco products into the US. But it is possible a US company could export tobacco to China and there's no tariffs on that side. A tariff can be one-sided or both countries impose tariffs. But we're mainly concerned with imports in the US. Of course, if there's tariffs on exporting semiconductor chips, then that could hurt a company like Intel, although most of their business is probably in the US. And Trump talked about this a lot, how he was going to impose tariffs on many different goods. So if, for example, he puts a tariff on semiconductor chips that come from Taiwan, then there's a good chance a company like Intel could get more business from NVIDIA. Trump did frown upon the CHIPS Act. That was signed into law by Biden. And the purpose of the CHIPS Act is to keep manufacturing in the US. It's just so expensive to make things in the US. That's why we have to go to other countries and import into our country. Everything is so expensive in the US. The taxes, the labor, buying materials, it's just so overpriced in the US. Instead of using legislation and billions in subsidies to bring chip building facilities to the US, Trump said tariffs would have the same effect, which in theory they do. Putting tariffs on semiconductors from Taiwan would force chip builders like TSMC to do manufacturing in the US to avoid paying the additional tax. That is one way to get around it, but like I said, it's so expensive making things in the US. If Trump does impose these tariffs, you could see up to a 55% increase in things like toys, or a 29% increase in footwear. But there's no guarantee chip builders would manufacture in the US. They might stay in their home country and pay the extra tax. This would cut deep into companies like NVIDIA and AMD, who rely on Taiwan Semiconductor. And Trump mentioned a 10 to 20% tax on all imported goods. In addition to that, a 60% tax on Chinese goods. Trump was on Joe Rogan's show, and he said in lieu of the CHIPS Act, he would just put tariffs on chips coming out of Taiwan, because that's where most of the chips are made. 44% of chips come from Taiwan. And if we added this tariff, it could increase the price to us by 59%. If these tariffs come to fruition, you may see companies leaning into Intel. So pick up Intel stock. Let's look at their third quarter presentation slides. So for the third quarter, revenue of $23.5 billion. That's in US dollars. In new Taiwan dollars, it's $760 billion. Look at those margins, 58%. Operating margin, 47.5%. Pretty amazing. And net profit margin, 43%. Above 20 is really good. ROE is return on equity. That's net income over equity, 33%. Last quarter was 27%. So everything's improving. Their revenue, their margins. Here's a breakdown in revenue of their chips. Their biggest revenue in the third quarter is 5 nanometer chips. The 7 nanometer chip used to be their biggest. Now it's the 5, and they've added 3 nanometers. When you see 7 nm, nanometers, it's made of transistors having a node of 7 nanometers. But 3 nm and 5 nm are just marketing terms. That doesn't relate to anything with their numbers. Companies just use the term 3 nm and 5 nm to talk about their newer chips. The lower the nm, the more advanced the chip is supposed to be. So here's a different breakdown of their revenue. 32% is 5 nm. The second biggest is 20% 3 nm. Then the third biggest is 7 nm, 17%. They also have some 16 and 28 still around, and a bunch of small slices of some other products. About half their revenue are chips that go into high power computers, 1/3 smartphones. Then you have Internet of Things, auto, 1% digital computer electronics, and then other. They pluralize other. It looks kind of odd, others. Internet of Things is growing the most, 35%. DCE is down 19%, but everything else is up. Their total assets, 6.2 trillion new Taiwan dollars. That's equivalent to 187 billion US dollars. 2.1 trillion of liabilities, equity 4 trillion. They have 65% equity, 35% liabilities. Remember, liabilities plus equity equals assets. AR turnover, 28 days. This number indicates how effective the company is in collecting its receivables. When a company sells on credit, that means they sell a product or service and they don't receive cash. They'll receive cash in the future. The higher the number, the more efficient the company is at collecting on its debts. Their current ratio is 2.6, so their current assets are 2.6 times their current liabilities. That improved from last year of 2.1. Here's their statement of cash flows. 392 billion of operating cash flow. Free cash flow, 185 billion. Here's their forecast for next quarter. Revenue, 26.1 to 26.9 billion. Gross profit, 57 to 59%. Operating profit, about 47%. Amkor is another big semiconductor company. They have a partnership with Taiwan Semi. It looks like they have a deal with a European company on the Dresden fab. Let's look at Simply Wall Street. Its last price, 190, 828 billion market cap, up 2% in the past week, up 94% in the past year. It looks like the stock started trading in 1997 at 484. This is stock split adjusted. In 2000, it was at 21 bucks. 15 years later, it was at $20. If you bought the stock at 2000, you'd probably hate this company. It's hard to wait 15 years and get nothing out of the stock. You may have gotten some dividends though. In March 2020, it went from 45, and then less than 1 year later, it was at 130. But it came crashing down to 65 in October 2022. God, I wish I picked it up then, because it went from as low as 60 to 200. It seems so obvious after the fact, right? But in the moment, we all hesitate and we don't buy it. At least I didn't. Simply Wall Street's valuation is 223. They say the stock is 15% undervalued. There are no analysts that price this stock. Their revenue in 2013 was 600 billion new Taiwan dollars. That's about 18 billion US dollars. You just multiply the number by 3, then cut off 2 zeros. And their revenue grows every single year. It got up to 2.2 trillion. Then it came down a little bit. And now it's up to its highest point ever, 2.6 trillion new Taiwan dollars. Their debt was 226 billion in 2013, up to 1 trillion currently. They always have a lot more equity than debt, so they're doing just fine. And they also have more cash than debt, so they could pay off all their debt if they wanted to. Their next dividend is on January 8th. The ex-dividend date is 12/11. Their dividend was over 3% for a number of years, as high as 3.7%. Then the yield came down to below 2%. Now it's around 1.5%. The forecast is almost 2% by 2026. They used to pay an annual dividend. That's why it looks so high. But now they pay a quarterly dividend. But if you add up the 4 quarters, it's higher than the annual they used to pay. The CEO's salary was $8 million in 2017. It ran up to $15 million. That's a little under $500,000 US dollars. Total compensation, $550 million. Tenure as CEO, 6.4 years. 55% of the companies held by the general public, 35% by institutions, 6% by VC and private equity firms, and 3% by the government. Their biggest shareholder is a National Development Fund. This is a Saudi Arabian fund that owns 6.3%. Then BlackRock, Capital Research. Singapore, I guess the country of Singapore, 3%. Their employee count went from 40,000 in 2013 to 65,000. And the ticker trades on the Taiwan Stock Exchange, the Pink Sheets, the New York Stock Exchange, the Mexican Bolsa, and the Deutsche Börse. So if you want to learn how to build your own DCF model, watch this video in the top right corner. I show you step by step, and you could use a DCF to value a stock like this. You can also get really good at understanding companies. Another benefit is improving your Excel skills. You can also email me and I'll send you a free DCF model.